Hello, everyone, and welcome to today's discussion on claims innovation, an important weapon in the battle for market share. This event is brought to you live from New York by Insurance Networking News and sponsored by Polaris Financial Technology. I'm Elliot Cass, and I'll be your moderator. This is a time of unprecedented and extremely rapid change in the insurance industry. In particular, over the past few years, competition for customers in every market segment has greatly intensified, even as new digital channels have given customers more options and raised their expectations higher than ever before. In this battle for market share, claims management has become an important weapon, and many life insurers are looking for cost-effective ways to improve their customers' claims experience. During today's discussion, we plan to touch on a number of important points in this regard. How forward-looking insurers are working to improve the quality of their customer claims experience, why a superior experience is an important factor in terms of customer retention and competitive differentiation, the advantages of a standalone claims management system as opposed to some of the policy admin add-ons that are so commonly used today, why the volume of life policy claims will continue to rise, and how to prepare for that influx. And we'll talk a little bit about the pay-as-you-go model and how that can help you upgrade your claims infrastructure, saving on costs, limiting your capital expense, and allowing your operations to scale as needed. To get into all of that and more, we have with us today 7 renowned experts in the claims management field. Welcome. Thank you all for taking the time to join us today. We appreciate it. And what I'm going to do now is kind of go around the table and ask each of you to briefly introduce yourselves. Susan, starting with you.
Hello, my name is Susan Rutman. I am the Vice President of Customer Services and Claims of SBLI USA. I have over 20 years of experience in customer service and claims areas, in addition to new business and document center. And my goal is to make sure that all our customers are satisfied.
Thank you. Walt.
Hi, my name is Walt Wojcik, and formerly CIO is more of a historical reference. I retired from Northwestern in 2002. Currently, I'm a 55-year student of the business. I continue my education working in this particular space. I'm an actuary by profession. And the reason I'm here is at my age, I'm more interested in making sure that your death claim systems are sound, equipped to handle my beneficiaries when the time comes.
Thanks, Walt. Sanjay?
Good afternoon, I'm Sanjay Mohan. I head Global Market Development for Insurance Products for Polaris. Been in the industry for more than 20 years, working with insurers globally, helping design and execute complex business cases both on policy administration side as well as claims side. My expectation out of today essentially is to initiate a dialogue on why moving forward, given the dynamics of the life insurance market, claims needs a much stronger emphasis than historically it has had in our industry.
Great, thank you. Amy?
Amy Averill with Nippon Life Insurance Company of America, the Vice President of Service, Administration, and Project Management, which includes claims. My experience includes 25 years of claims, customer service, and benefits administration. And my goal today is to learn more of the innovative technologies that are coming out in the world of claims as we look to, as an individual organization, enhance and redevelop our products in the life and disability area.
Thank you, Amy. Pat?
Good afternoon. My name is Pat Parry. I work for AXA out of Charlotte, North Carolina. I'm a senior director responsible for our claims and disbursements on the life insurance side. I've been in the industry for about 25 years, predominantly in claims the entire time. My goal today is to try to understand companies that may have put in the pay for performance claims model and see if that's working and the benefits and costs.
Pranav?
Hi, I'm Pranav Pastrecha. I'm the CEO for Polaris Financial Technology, the insurance business. I've been with Polaris for the last 3 years, and prior to that, I've been, an executive with one of the top 20 global insurers called KB Insurance Group. And during that time, I've had the pleasure to run both IT as well as claims operations. So I've had a very interesting challenge of, transforming claims as both the operations and the technology executive. Outcomes or expectations from the session, as we see, as the complexity of claims and policies grow in the life industry with things like disability, long-term care, we wanted to talk about or see how carriers are dealing with the complexity it creates in the claims process, and how do we drive best outcomes in that complicated environment.
Great, thank you. And last but not least, Tom.
My name is Tom Scales. I'm the Research Director for Life and Health for the research firm Celent. In a prior life, I've been in the industry for over 30 years. I was the COO and CIO for Transamerica Life Insurance, including claims. My expectation today is to further my knowledge on the subject and learn from my esteemed panel members.
Great. Well, again, thank you all for joining us today. I just want to take a moment to remind our audience that our panel will address your questions as you submit them during the course of the webcast. To submit a question, just click on the question area on your console, type in the question, and then click the submit button. We'll get to as many of those questions as we can during the course of the webcast. And now, let's get things started. So, panelists, are we in the midst of a claims revolution, as we so often hear? What does the industry landscape look like right now, and what do you see as the biggest challenges? Who wants to kick this off? Walt, what's your perspective?
I guess from my perspective, I kind of relate it back to a recent event, the unclaimed property problem that was created for the death claims that needed to be processed. But I go back to the 2008-2009 financial meltdown, and all of a sudden some significant redesign, need to revenue sources, new products designed that are much more complicated in terms of the claims handling, claims processing that's necessary. No longer is it a once and done following a death claim. You have periodic payments. You now have payments that are being treated in significantly different manners. You've got long-term care riders, you have revenue sources, et cetera, that are being looked at, and certainly made the claims processing systems a lot more complicated than they were before. And so you've got these two events that are driven, at least in the claims area, more companies to take a hard look at what do we need to be sure that the claim systems are processing what's being processed today, historical, but more importantly, be able to accommodate the new products and the heavier influence on annuities and various types of annuity sales going forward. So it's a much different environment that's demanding a fresh look at claims processing in general, but more specifically for an area that has been, for the most part, maybe ignored for too long periods of time.
Susan, are you seeing the impact of that environment that Walt's describing?
Absolutely. We have much more challenges now, not only in processing the claims when someone calls in and says that their family members died, but now we need to look for beneficiaries and find family members of people that we find out have been deceased for a while. And it creates a large challenge because we're used to dealing with people who call us and trying to work out the paperwork with them, but now we need to tell people in some cases that their family member is deceased when they don't know it. So I think it creates a much more time-consuming and much more, it creates a lot more work.
I think you can really see some of the data integrity issues from the past as you're trying to research people that had policies for 30 and 40 years, but I think that also shows going forward how important it is to have the correct data today, because as the policies get larger, mortality changes, what do we need to be able to report on or look back on now 10 years from now? We're seeing that with some of the regulations looking back, trying to find beneficiaries of people we haven't talked to in 10 years, but we have to be thinking forward as well.
I think this is also an area where we haven't seen the investment we might have seen in more of the distribution-oriented areas like new business and underwriting. The claims organizations tend to still have a lot of manual effort associated with them, and they aren't necessarily getting that investment. And let's face it, this is a part of your organization that has a big impact on your reputation. You're dealing with people in their worst possible time, and you want to show them how you're there to help them. And you need the technology underneath that to do that in a very compassionate way.
Pranav, did you have a comment?
Yeah, building on Tom's point, I think, traditionally I see a lot of carriers focusing the business case very narrowly on the claim settlement expense, and therefore the need or the imperative to invest and improve operations kind of gets ignored, or at least put at the back of the priority order in the business. However, I totally agree. I think the impact both from a regulation, brand image, and also from in cases where there is a more complex portfolio, the actual bottom line impact of claims payment, I think those are substantial. And I think I would urge carriers to have, look at the problem in a more holistic manner than perhaps what most people are.
So on the flip side of challenges are opportunities, and what Pranav just said is kind of a good segue into this. How can life insurers take advantage of the upheaval in the claims space to accelerate their growth and improve their profitability? Do you think that's possible? Amy, any thoughts on this?
Sure. Thank you. I think the interesting component that goes along with that is there's always opportunity when chaos blends itself into an environment. And with that, what we find is that the deliverables and the outcomes are truly what's driving some of the technological needs that are evolving in this day and age. I like the approach of, kind of addressing the areas from a cost perspective to allow for components to be addressed as needed so that the overall impact can be more significant. But the challenge is different for every organization and where they are in that migration path and where they might have made investments in the past or not, and then the marketing technology that they're spinning going forward. So I see it as a very unique opportunity for us, but not one that's easily answered.
I would agree, and I think historically in an industry where perhaps the claims volume were reasonably low, and primarily because in the life of the claimant, there was one claim pretty much. But as insurers try to move on from pure death benefit kind of policies into either riders on that policy for critical illness, DI, or alternate products which allow them to cross-sell and have a higher cross-sell index into the individual, or perhaps even a group, that itself creates the need to look at claims in a slightly different light. So whereas historically it may not have been a tool for satisfaction per se, and allow you to cross-sell, but moving forward it might be, because it just multiplies the number of touch points that you'll have with the customer because your product set is changing.
I think there's an opportunity and a challenge associated with the new breed of products as well. There are an awful lot of life companies that have only had to deal with a single event life claim, and now they're having to deal with combo products with disability and long-term care, and so they're having touch points with their customers like they've never had before. And it's truly a revolution in a lot of these companies to have to understand how to do it and how to take advantage of that opportunity, like you just said, to cross-sell and upsell and establish a broader relationship than just the one-time event.
The revenue side. When you stop to think about some of the prepayment death claim options that you have on critical illness riders that are being added, I mean, arguably it's a claim being paid early, but the difference between the actual full death benefit and the critical illness payment is, that gives a company an opportunity to at least extend the payout of the balance. So in a tough environment with low interest rates, even that small spread makes a difference. And the other thing with the life claims too, if you think about the customer relationship that extends beyond the relationship with the insured, you want to make this a lifetime relationship with the beneficiaries as well. So I think, again, this is to try and create new sources of revenue, extend the revenue chain. So you want to look every opportunity to service a customer in any way you can should be an opportunity to make an additional sale, to develop the kind of relationships that the Amazons and the Googles of the world are doing.
So I want to pause for a moment because we have a question from our audience that maybe we could address. He asks, What about drones to service claims? Is that something that any of you have considered or think is a practical suggestion at this point?
So let me chime in. I think that might be an idea that's probably a bit ahead of its time, but I will make a point on that from practical experience on lines like workers' compensation. We have taken a very, in my past career, taken a very proactive approach. For example, when we get cases of disability or injury or patients needing long-term care, of having a very mobile fleet of case managers which are nursing qualified or have inclination of that nature to be able to proactively manage injury cases, encourage return to work, and basically shorten the duration of the claims payout. Now, to the point we were making earlier, the life industry has, in general, I don't think embraced those kinds of advanced principles of injury management or claims management, because in my opinion, a lot of the life industry has come from the background of very simple death claims. So the need has never been there. But I would very strongly urge that, as we were talking about earlier, as the complexity of claims grows, I think the carriers have a huge opportunity to right size, to optimize their claims payments by taking a more proactive view of how they can manage return to work, injury, and generally treatment regimens of their insured. Now, whether drones do it or some other form of method, but I think insurers will benefit from getting out of the office to manage claims better.
If Amazon can have drones, why can't life insurers have drones? Does any...
that I haven't specifically thought of drones per se, but I can leverage of technology like, for instance, wearable devices. I've always wondered as to what that might do to various aspects of a life insurer. So, wearable devices down the line could monitor vitals of a prospect, and does that help speed up time to market of a product? I don't know, something perhaps you guys might want to comment on, or even regular health checks on the insured. Sorry.
Take that to the next step of a disability or a long-term care claim. The information you could gain from a wearable of kind of the status of the individual is intriguing. You could certainly cut some costs, but I kind of combine your comments with Walt's too, that the customer available technology, whether it's a drone or a platform, this is the first experience that next generation has with your company. And if they're having to manage a claim for their parent, then they want to be able to do it on their phone. They want to be able to do it on the web. They don't necessarily want to do it through what we might consider traditional claims channels. They're expecting to be able to bring up and see all the claims activity across a long-term care claim on their phone and kind of monitor their parents through it. So I think we're going to see a lot of technology finally make it into the claims space that we've seen perhaps earlier in the new business space.
So let's back up for a second. We're going to get much more into this whole question of technology in the claims space. But first, let's talk for a moment. How does the customer's claim experience relate to this whole, it's obvious on some level, but really, let's explore it. How does the customer's claim experience relate to this whole question of customer satisfaction, customer retention, and the battle for market share? And let's link that to something that Pranav touched on a moment ago. Is this, what kind of a curve does this throw life insurers who have a whole history of dealing with basically one claim per account? So what's new and different now in that regard?
What I found is that not only is it one claim for an individual, but in a lot of cases there are family members involved where the family is individually covered, and the satisfaction given from paying one claim also drives the people to continue to keep up their insurance policy on their other lives, in addition to also perhaps buying additional insurance because they're so happy with the company that they want to stay with it and still accept that personal guarantee that they're going to get the best service that they can get.
Pat, does that resonate with AXA's experience?
Yeah, I think at the end of the day, it's a new customer to us. So we want to treat them as a new customer and trying to show the experience there. We're competing with the beneficiaries who likely already have some type of relationship, whether it's with their bank or their broker. So we have a disadvantage from that standpoint, but we have to come back to we've just kept the ultimate promise. We've satisfied that claim, we've paid that, and the people are happy. We've proven it where the other companies like the banks or the Merrill Lynches or the brokers, they're suggesting that they will. So we really have to try to build on that proof.
If I can add, so historically there may not have been quantified data to suggest a strong correlation between satisfaction per se and claims, but intuitively it kind of makes sense, right? This is the worst of the times in somebody's life, in the beneficiary's lives as well, and the way you handle the process eventually impacts the relationship with the beneficiary. But I think moving forward, like we were talking earlier, as you add on more such products which will increase the number of customer touch points, as Tom pointed out, I think we'll start seeing a lot more quantified correlation between the way we manage the process and the eventual impact on satisfaction and retention.
I would add that I think what everybody's mentioning is that the loyalty is the key factor. So driving the loyalty through the service element and gaining the experience of the end, it's not a one and done anymore. So you have a whole generation of people that you're touching, to the points that were made earlier, that are much younger, and they don't know one insurer from another. So that experience and that touch point is one that you cannot recapture quickly or easily through marketing efforts. So when they gain that experience of loyalty through the experience from another individual in their family or through a friend or et cetera, it truly blends itself well to repeating business and the opportunity to sell again.
It is interesting also when you stop to think about the relationships that we have. If an agent's no longer in the picture, how many people really know anything about the beneficiaries of the policies? How many insurance companies have mined whatever data is there to capture another opportunity in maybe in a more direct mode? I think there may be a hidden opportunity as well. Every opportunity to interact with the customer is an opportunity to build and extend the relationship, and I think you have to look for more and better ways in today's environment.
I think you're absolutely right, particularly for some of the more commoditized products that might have been bought over the phone or on the web even. This may very well be the first experience anybody in that extended family has had with your company, and so you want that to be an extremely positive experience for them. The word of mouth implications at a difficult time is huge.
That's a great point. And, what we were talking about over lunch, you mentioned, what if life was offered on an exchange tomorrow? Your first point of contact with your customer in that case is when the claims happen.
Right.
And that's the importance of managing that process in a way that gives you opportunities to cross-sell and upsell.
Another issue in today's environment, I think we're finding a lot of emphasis on investment-oriented products. I mean, annuities, because people are concerned about retirement benefits. Clearly, processing those benefits are a lot more complicated. We were talking about the separation between AXA's single unit that handles life companies in North Carolina, but annuity claim payments are two separate centers elsewhere in the United States. The forms are much more complicated, and yet that movement more and more towards products that are going to be geared to provide retirement savings, et cetera, there's going to be more focus.
So let's talk about the impact of all of this on the process. Over the last 5 to 7 years or so, life claims have kind of moved from a straight ahead, very established, very linear process to now much more of a unique and a process guided with some intelligence about the customer. So how have claims management systems evolved to keep up with this? Do you have the technology, do you have the platform that you need to help you as the process has bifurcated and become more complex?
I think the short answer for most companies is no. They're running on old systems, some of them repurposed from another industry, in a lot of cases that are 20 and 30 years old. So they may have wrapped some business process engineering around it or some imaging capabilities, but this is truly an area of underinvestment in our industry and an opportunity to differentiate your company.
Yeah, sadly that's true, right? Because so many examples of how claims is really managed via the policy admin systems in an integrated fashion, and has been underinvested historically over the last so many years. But perhaps this is the opportunity to relook at that investment model and see maybe there is a different way of doing it. What's your experience, Pat?
One of the things that I think the opportunity is not to just look at the claims the claim system, like you said before, is how can we use, if we get a better claim system and better data, how can we use that to better price future products or the mortality and underwriting? If you can sell the whole package, then you can more get that funding, which has typically been lacking just because it's a back-end function.
Not at Northwestern, because we were a relatively unique company focused on doing all the things in place early, but my historical experience has been with companies. You focus on a new product introduction, you worry about the underwriting, you worry about the payment of the commission, you worry about the business processing in that order, and since claims are going to be somewhere out in the distance, the amount of technology that's used to create the claim solution is something that's, we'll get there. We aren't going to have claims in the near term, so it becomes the biggest mortgage that's left behind. And I think that historical situation has created a lot of the issues that we have with claim systems that are behind the times. And we're in a situation today where that relationship with the extended customer and the beneficiaries is so much more vital that you need to have your systems brought up to date certainly as soon as you can.
Well, let's face it, the term day two in IT was invented for the claim system.
Oh, please, go ahead.
So I was just going to say, to build on these points, I think unfortunately one of the things that we observe a lot in the industry is on the claim side is this problem of, you don't know what you don't know. Because unfortunately in the industry, the claims technology has been ignored for so long. And if you, for example, compare it to, property and casualty, where a lot of emphasis has been paid on claims transformation, I don't think that kind of emphasis has been put on the life annuities industry. But I would urge that there is a lot of value, and if somebody were to examine the options available today for better technology, you would see that truly the benefits would go way further beyond than just operating cost reduction into customer experience, into claim settlement cost, into product. So I just urge that look at the technology and the implication from a broader lens, really.
Let's pause for a minute to poll our audience. So we're going to poll them to get a sense of how well positioned they are to move ahead with some of this new technology that we're alluding to. The polling question will appear on their screens in the center. And to participate, please choose one of the answers that's presented, the one obviously that corresponds most closely to your own and your organization's experience. Click on it and then click on the submit button. So I'm going to take a moment here to read the question. What is the biggest barrier in your organization to claims technology transformation? So there are 5 choices here. Not enough claim volume to justify the technology change. Claims technology alternatives are too expensive. We're already using a modern claims platform. There are no barriers. We're just looking for an alternative. And the 5th choice, none of the above. So again, what's the biggest barrier to claims technology transformation in your organization? Not enough claim volume to justify the change. Claims technology alternatives are too expensive. Already using a modern platform. There are no barriers from your point of view. You're just looking for the right alternative, or none of the above. And now we're going to close out our poll and see how you all responded. So by far, not even close, 67% of our audience indicates that claims technology alternatives are simply too expensive for them to consider at this point. The closest runner-up in terms of responses was the first choice. There's just not enough claim volume to justify the change, but that was only 13% of our audience, and another 13% indicated none of the above. So, I'd like to turn back to the panel, but maybe we could start by reacting to what we just heard from the audience in the poll. Do you agree with them? Are the options too expensive? Is that the biggest barrier, or is there something else going on? Amy, do you have a thought?
I have a thought. I'd say many of the options are expensive, but when we're looking at true return on investment, if that's the way it's being evaluated, there's different angles to look at that. I think Pranav had mentioned earlier that there's a variety of different ways to angle a perspective to determine cost prohibitiveness or associated relevance to your organization. So we look at it maybe in a little bit more compartmentalized components and what I would call chunk it down. So the pieces that make most sense to have the biggest impact. Taking an opportunity to invest, jump both feet in is a little too much for many organizations. So I feel as though opportunities exist, but every organization has certain budgets in which they have to live within. So
I know we're starting to see a shift in the industry from an absolute desire to run technology in-house to an interest in running in a different business model. And one of the available opportunities for a lot of these companies in that model is to go from a fixed cost model to a variable cost model. And you can apply that to more than just claims, but certainly within claims there's some opportunities to spread that cost over a period of years and make it volume-based. So there's ways to creatively finance these projects that might be a little non-traditional.
I'm not surprised that 67% chose that option, and my thinking is like Tom said, claims was underinvested from the carrier standpoint. I think it was also underinvested from a software solution standpoint. And that happens in every industry, right? It's a demand and supply kind of issue. If there is a lot more interest from the buyers about a certain technology or a certain functional area, then obviously there's a lot of investment goes into development of solutions in that area. So given the historical situation that we just spoke about, I'm not surprised 67% chose those. That said, there are alternatives now. So there are like we spoke about moving into the cloud model. You can pretty much eliminate the cost side of the business case issue altogether, and find significantly lower cost solutions where you don't have to trade off functionality or the look and feel of the system or the eventual experience which the system delivers, but drastically impact the cost side of the equation.
So let's circle back to that in a moment.
Excuse me, Ellie, one other quick comment if I might, and that has to do with, I've always believed that you build systems for competitive advantage, you buy systems for competitive parity, so that unless you built something the advantage, but mindful of both cost and time it takes to construct it. In today's environment, focusing on the cost of death claims as opposed to what we were talking about here, is there an opportunity to extend a relationship, to generate new revenues, so that instead of the focus and discussion of a death claim alternative being on the cost of it, to start trying to identify those opportunities where you can create additional opportunities for revenue, extend that death payment, for example, so that you use the money a little bit longer. Because I think a lot is what's driven the industry since 2008, 2009 has been focused on revenues. Just an opinion.
Again, we're going to circle back to this in just a moment, but we also have several questions from our audience, so I'd like to take one of those now. This gentleman asks, is consumer self-service likely to change the claims landscape? So in auto, yes, but in life, I'm not so sure. What do you think?
Well, I think you have to give the customer what they're looking for. And as our beneficiaries get younger and younger and they're looking to do more self-service themselves, then you have to make that option out there. The problem is, as we talked about, is if you're looking to cross-sell or kind of develop that relationship, the more self-service you do, the less opportunity you have to do. So, but I think at the end of the day, if you can provide the great customer service, but if you're not giving the customer what they're looking for, if they want that self-service, then you're not going to keep them.
The advantage of self-service is that there's speed involved and they can get things much faster. You can get forms faster. You can have it the same day. You can download it from the internet. You can have it faxed to you. You don't have to wait for the mail to be delivered. So in some ways there is an advantage, but again, yes, you don't have the touch points that you would normally have with a person either speaking to them on the phone or having them in front of you. So there is a difference.
If I may, on that point suggest, I think there is a middle ground. If you know that an incident has happened, and yes, if the customer does choose a self-service route. There's nothing stopping the carrier from proactively reaching out, even if it's a courtesy call. Right? There are 10 different reasons why you can call a customer and say, look, we're very sorry this has happened, hope you're all right. There are opportunities to initiate contact if you so choose. But I totally agree. I think self-service is both in the interest of the customer and of the carrier.
I don't think you want to forget the opportunity for the agent to be involved as well.
Right.
In many cases, the beneficiary is in an area, geographic area similar to their family member, and there's an opportunity for the agent to get involved and assist in the process. They may initiate the claim through their phone, but potentially the agent could even deliver the check. So there's a combination of providing superior service while maintaining those touch points.
According to a survey by the advisory firm Strategy Meets Action, this was done in 2014, 37% of insurers across all fields, including life, plan to increase their investment in claim systems and related technologies. So that's over a third. For life carriers, what's the best strategy for developing or upgrading a claims management system? Should these systems be standalone or integrated? Should they add new functionality incrementally, or do you scrap your old system and start from scratch? Do you build it in-house, or do you go to the outside? What do you think? Don't everybody talk at once.
I'll look at the carriers to respond.
Yeah.
Amy?
I'll take a chance at that one.
Okay.
I'll go first. I think that everybody's going to have a different opinion, but the thought process of moving, scrapping something and jumping feet first is frightening in and of itself. So from that perspective of the mentality that incremental approach is probably most appropriate for an organization that I'm affiliated with. The other part of the question...
Well, do you go standalone, or do you integrate it with your other core systems?
I believe in integration. You get efficiencies from integration, and I think that it also helps you, not only efficiencies in a variety of ways, but data mining, data management, and helps you clean things up. I think that that is a key component of it, at least in the world that I'm working within.
And do you develop it yourself, or do you go to the outside, or maybe take a hybrid approach?
I believe in a hybrid approach. I think there's a lot of great technology. Let's all face it, I don't think that I have all the most original and best thoughts that go along with it, and anybody that does is kind of missing the boat. I think that there's a great opportunity out there for good talent in a variety of ways, and you've got to keep your eyes and ears open to see what else is out there. So by integrating and or looking to see what else you can bring in or achieve from working with another organization would be beneficial.
Tom?
I don't think standalone versus integrated is necessarily mutually exclusive either. You can have a standalone component that is the best in breed in claims, but tightly integrated to make sure your calculations are the same, your feeds are the same, your data is the same. So I think you just need to consider your implementation approach when you're choosing the technology. Don't exclude a standalone system because you want that level of integration.
Totally second that. I think the challenge I would like to throw is the time has come to move on from using the policy admin systems to manage claims. So there has to be a standalone claim system in that manner, but it needs to be well integrated with all core systems. Otherwise, the claim experience at the end of the day will not necessarily be very good that what you're looking for.
What about the aspect of build it yourself or outsource, go to the outside? What kind of balance do you see striking there?
How many companies have the financial wherewithal to build all of their technology themselves? I mean, realistically, that's why software vendors were created in our industry 30 and 40 years ago, was to share that cost across multiple customers. And I don't think that model has significantly changed today. Certainly you're going to see some custom work, maybe in the mobile space, but for a core system like a claims, I'd be hard-pressed to invest my limited dollars in building my own.
Well, you should ask, how many people go to the tailor today to get a shirt made? We all wear different color shirts to match our styles, but long gone are the days that you went to a tailor because you wanted to get a shirt made for yourself. And I think similar thing holds true for technology. I might be using a very controversial or very basic example. The point is, there is best in class technology that is developed by people who specialize in insurance technology, and that's their core business. And the amount of investment that a dedicated software firm can put into, both from a functional perspective in sharpening the saw on the product because, you have global experience, as well as, in refining the technology because that's your core business. And this is coming from a long-standing, I've had many more years on the carrier side than on the vendor side. I think you simply can't get that combination inside a carrier, with all due respect. So, and I don't see any harm when you have a technology which is here and now and can be customized to suit your needs, to your business process needs. Why would you not?
So go back to the buy versus build point that I made about you build for competitive advantage, you buy for competitive parity. So unless you're going to build something from scratch that's going to really be a source of distinctive advantage in paying claims, maybe the best solution is a blended solution that allows you to keep those pieces of the existing systems that you have in place. If there's and today certainly technology exists where you can do bits and bytes and different pieces. And then from a cost perspective, years ago somebody told me, and I've never forgotten the reference, I don't know who it was to give credit to, but in the absence of a compelling value proposition, value is determined by cost. So unless you can come up with an incredibly significant value proposition about why you need to do whatever it is that you need to do, everybody's going to be stymied by how much it costs to get it done. So you need to focus more on whatever solution you come up with, the value of moving in that direction. I happen to be a proponent of cloud-based solutions, some of the other options that I've seen, so I think they exist. But time to look at them.
And fundamentally, there are three dimensions, right? When you make a decision about whether to do it on your own or do it using external help, you need to consider time to market, you need to consider the cost to market, and there might be a third overall philosophy of the IT organization. You may always choose to build rather than to buy. But if you keep aside the need to create a claims process which is very, very different and unique to yourself and go with what may be available, quote unquote, out of the box. Now we are talking of deploying claims processing engine in a matter of weeks and not months or years at a price point which may be less than $10,000 a month. So speed and cost are no longer a factor. It's a question of, are you comfortable taking that step of leveraging, as Walt said, alternate models like cloud computing?
Well, picking up on what you both just said, let's talk specifically about the cloud platform as a delivery vehicle for this. So what advantages does that offer in terms of adding more value for the organization, in terms of speeding time to delivery? And I guess more fundamentally, is that a model that you're seriously considering at that point? In other words, do you trust it? Do you have a comfort level with it? Do you think it's addressed, some of the important but peripheral issues that go with, deploying a platform like security, for example? So, thoughts, Pat?
Well, I was just thinking, we were talking about the industry being underfunded in technology, and while the cloud solution theoretically seems to work, I don't know any major claims teams that are on it. So, while I'd just like to see the technology advance before I'd be willing to put my technology dollars there, because if I'm getting the dollars today, it's going to be a long time before I'm back at the table.
Other thoughts?
I would offer that I compared to Pat and in agreement to some degree that I would consider early adoption, but need to vet it out a little bit further. So not knowing all the pluses and minuses, more so the minuses or the challenges that want to engage for early adoption, but be concerned of some of the elements out there that might be prohibitive.
Sounds like it's a whole new field that really needs a lot of investigation before people are going to start using it.
think we'll reach the point where it's just one of the implementation options, but I don't know that there's the comfort level in our industry. Other industries are farther along than we are, but we deal with a lot of personal information that those industries might not. So I think it's where we are on the continuum, not whether we'll ever do it.
Well, sure.
I was just going to weigh in on the debate because, you know, I myself come from a very risk-averse carrier background, very, very risk-averse. So, but the simile I'd like to bring to is previously, you know, we all kept our information on our own hard drives and backed them up and all of that, right? Today, a lot of people would use Google Drive or Google Mail and so on and so forth. And the reality is, for whatever we may want to, you know, whether we accept it or not, the reality is that a lot of these cloud-based solutions, whether it's for mail, whether it's for collaboration, whether it's for document storage, actually have a lot more robust security, backup, disaster recovery than what an enterprise can afford within its firewall, right? I think truly in the last 5 years, the paradigm has shifted. The kind of muscle power, the kind of security, intrusion, prevention, you know, geographical diversity of data centers that the cloud option offers today. And you can have all of that within the continental United States, right? So from data privacy or any regulatory issues, today I think we are at a point where all of these concerns, to my mind, have really become moot point. What probably needs to shift in the industry is the mindset. You know, to my mind, you know, and I think both of you have touched on the point, is the industry ready to take that leap of faith, I think is the bigger question. I don't think that credibly today we can negate that argument based on any technological issues.
So we're going to take a moment now and poll our audience on this question. But before we do, I just want to add a comment of my own. I have some background in the IT industry, and I'm well aware that when the cloud gets raised, the first issue that gets brought up as an objection is security. But the reality is, and this has been sort of, you know, said by other people than me, the security available through most cloud services is typically far superior to what an organization provides itself because of the concentrated expertise and resource that they have within their organization. It's a very sensitive issue because of because you're on the hook, you know, regulatory issues, compliance issues. But in terms of an individual carrier's ability to match a purveyor's, you know, a service provider's resources in terms of developing security, it's the same as developing the application. They have far more resources and experience than you do. But let's see if our audience agrees with me. So again, the polling question is going to appear on your screen, and we'd like everybody to select the answer that's most applicable to them. I'm waiting to see the question come up so I can be sure that the audience is seeing that. Could we have the second polling question up, please? Or maybe not. You know what? Let's move ahead and we'll wait for... Oh, it's up. Okay. Apparently, I'm the only one who's not seeing it. So here's the question. Is your organization ready to adopt cloud-based technology solutions? And there are 5 choices. Yes, we're ready. 2, yes, we're ready, but only private cloud solutions. 3, yes, we're ready, but not for core processes like claims. 4, yes, but only private cloud solutions for non-core processes. In other words, answers 2 and 3. Is that clear? Okay. And choice number 5, no, we're not ready yet. So again, very quickly, is your organization ready to adopt cloud-based technology solutions? Yes, we're ready. Yes, but only for the private cloud. Yes, but not for core processes like claims. Yes, but 2 and 3, only private cloud and not core processes. And 5, no, we're not ready yet. And with that, we'll close the poll. And I'm hoping I'm going to see the responses here on my screen, but maybe not. So here we go. Thank you very much. The dominant answer by far, 50% of you are saying yes, you're ready, no qualification. The second closest answer was 25% of you are saying yes, but not for core processes like claims. And 17% of you are saying yes, but only for private cloud solutions and not non-core processes. But 50% are ready for the cloud. What do you guys think?
It's higher than I would have expected. I mean, if you add all of those up, the huge majority are willing to do it for something.
Do you believe it, Susan?
I am as surprised as well, but I think that's great. I think it's great because it shows that we're moving on. We're moving on to more. We're getting there.
Okay, well, let's loop back to what we were talking about before, and let's talk a little bit about some of the issues. What would you like to see? I guess 2 points. One, does the cloud model make sense to you? Is this something that you would like to be able to move to? Do you see advantages to that? And then if your answer is yes, what do you need to see? You know, where's your threshold before you're willing to put a toe in the water? Pat?
Like I said before, I think that the technology makes sense. We do that in our personal life a lot of times, so it certainly makes sense. I guess maybe starting on a non-core process, in my company would make me feel more comfortable before moving the claims there.
Amy?
I'd say our organization is usually traditionally very risk adverse, but when we look at the benefits outweighing the risks, we tend to make a determination on going with a non-core process environment, and then we'd migrate. So we're slow growth migration opportunity. So we would look at it. I'm ready, but I don't know that the full organization is.
Okay, so using a cloud-based or pay-as-you-go approach, some life carriers, I'm not making this up, this is a real statistic, some life carriers claim to have reduced their claims processing time by as much as 75% and significantly lowered their costs in the process. Are these figures realistic? Can a cloud-based approach really provide such a dramatic level of improvement? And I'm going to ask Sanjay or Pranav to share their expertise with us on this. And what do you think?
Yeah. I think, we have seen it and we have delivered it for our clients. So I think there's enough proof out there. On the cloud, the turnaround times that you described or the processing cost reduction, you can have it with an in-premise install or a cloud install. I think the big shift to the cloud install is that rather than spending years, 12 months, 18 months, 36 months doing a claims implementation program, with a cloud-based solution, you can be up and running in a matter of weeks. You can, get this thing done for almost next to nothing to start with, rather than spending millions and millions putting an in-premise version. So I think that's where the cloud differentiation is. Get up in weeks, pay almost nothing to start with, and because you're sharing the infrastructure with other people, not your data, just because you're sharing the IT infrastructure, you get significant orders of magnitude reduction in cost. I think it's basic economics at play here.
Tom, what do you think?
I have a little struggle with the causality of cloud to the savings. I think you have to break down all the pieces. I do agree that an implementation in a cloud environment is traditionally easier to do with less infrastructure investment, but I don't think you can discount the capabilities of the new system you're putting in as well. You can put a really bad system in the cloud and not save any money, or you can put a really good system in-house and save an enormous amount of money. So what you're looking is the whole package. You need to look at all the pieces. What it comes down to for a carrier is the whole cost-benefit analysis. I want to know what the function is, what the capability is, what it offers my customers, and price and implementation time is a piece of that whole picture.
See, the key metric in your question is reduction in processing time, and to me, that is purely a function of where you are today. What are you currently doing? What are you currently using to process claims? And that metric hence can vary from or can vary based on the solution that you eventually deploy. Even a non-cloud good solution can perhaps impact that metric quite significantly based on where you are today. What the cloud model does, as Pranav and Tom also pointed out, is significantly impacts your the time that it takes you to get there, and that's the biggest thing. So you deploy the solution in weeks, and at a much lower price point than you can think of, and that just sweetens the business case of actually doing something with the claims environment compared to what it has been, where what we've been talking about, minimal investment in the claims environment.
We are running low on time, so this is going to be your last opportunity. One last question for each of you. Susan, what's the future of claims management?
Well, it looks like there's a lot of opportunity out there. The cloud sounds like it's something that we should look into for the future because it's here now and in other areas, and it's something that I think would be a valuable tool.
Walt, future of claims management.
Obviously, I think it's going to be another source of revenue, another way of building relationships between prospective and customer. So I would look at it less as a cost element, but more in terms of the opportunity it creates to create new relationships, extend relationships, and generate revenue. You have to start thinking about that because the relationships are going to be longer as people age, but then you're also going to get that increase in volume as folks like me reach the pinnacle.
Sanjay, future of claims management.
Well, as we discussed, I think as the product portfolios evolve, this creates a great opportunity for carriers to manage the experience in a way that it impacts eventual cross-sell of products. I think from being underinvested, the future is a higher emphasis on claims management, and I'm very excited to hear that 50% in the audience believes that they're ready for a cloud-based solution. That's phenomenal to hear. That's phenomenal to hear.
Amy, future of claims management.
I think the service deliverables are driving the future of claims management, and that's obviously with some of the responses we've seen today coming through with the new technologies that are out there. So we're excited to embrace that opportunity and see where it's going to go. But from our perspective, I think the future is in the service.
Tom?
I think as Walt said, the focus is on how you can attract more customers and use these customers to upsell and cross-sell. But I think traditionally it has been a back office, a customer service function, and whether it's the complexity of the products, the increase in claims, the focus is on claims now. So now's the time to use that that eye that's on claims to try to get the solutions and technologies that we need.
Rana?
Yeah, no, I agree with what Pat said, and building on it, I think the time is now, and I think it's not a question of if for carriers. I think it is a question of when. And I think people who act fast and do it will certainly gain a competitive advantage in all aspects of the business. And I think the people who take time will eventually have their hand forced.
Now, Tom.
I think it's just the perfect storm. You've got an underinvested area combined with an aging population with increasing expectations. So if it's not an area you're looking at now, you really need to consider it before the baby boomers get much older.
All right. Well, unfortunately, we're out of time. This has been a great discussion. Thank you all very much. Really appreciate you taking the time to be here in New York today to participate in this roundtable. Hope the audience found this all valuable as well. And of course, I'd especially like to thank Polaris for sponsoring today's event. If you missed, a number of you asked, if you missed any part of today's webcast, you'll be able to listen to a recorded version within 48 hours on the Insurance Networking news site. My name is Elliot Cass, and on behalf of Insurance Networking News and Polaris Financial Technology, thanks for being here and have a great afternoon.